covering Budget 2026 live from our newsroom. Big headlines coming in, and let's start with the first one, which is the security transaction tax hike which has come by. The STT hike, that is on futures and options. Now remember, the ask was to basically withdraw STT completely and only keep LTCG, but it has been reversed of what the market was expecting, and that's the reason there is a sharp fall in the markets overall and capital market stocks as well, be it the likes of BSE, Grow, Anurati Wealth, etc. So let's take you through the numbers first up. For futures, the tax has been raised by 2.5 times, and options it has been raised by 1.5 times from the current levels. It has increased on options from 0.1% to 0.15%, and on futures it has increased from 0.02% to 0.05%. It has come in as a dampener, absolutely not expected, and that is the reason you're seeing that sharp fall in the markets as we speak as well. Now there's been no mention of any LTCG or any LTCG cut, any revision in rates, and that's another reason why the markets are seeing a sharp fall from the highs. The other big headline has been there's a change in the buyback tax. We are still to read the fine print because we need to understand what exact rate would it be taxed at right now, because as Finance Minister Nirmala Sitharaman said in her speech that now tax buybacks will be taxed as capital gains versus the current rates, which was basically your slab rate that your buybacks were taxed at. She did indicate that tax rate for corp promoters and non-corp promoters, it will be 22% and 30% right now. The indication is it is a good move for both corp promoters and non-corporate promoters, because earlier it would be around that 23% mark. However, we are still to read the fine print and understand what it means for retail investors generally, but this is the other big change that has been announced. The third one has been the big number, that is the capex number, which has been announced at 12.2 lakh crore rupees, which is up 9% from the FY26 levels. Additionally, they have also enforced the safe harbour limit from 300 crore rupees to 2,000 crore rupees for IT services. This was a big ask from the industry, and finally there has been an action on that, and that is something which is positive for IT sector overall. Additionally, in terms of investments, because we've been talking about what's happening globally, geopolitically, resident individuals abroad will be allowed equity investments via the Portfolio Investment Services or PIS. Individual limit that has been raised from 5 to 10%, and the overall cap has been increased from 24% to 10% currently. But the big talking point has been this hike which has come in on STT, right? And that is what markets will be discussing. The other thing that we need to understand is how buybacks will be taxed now, because definitely there's a major shift there. Also, there is a deduction in tax collected at source for services or actions taken under liberalized remittance scheme. Basically, if you went abroad and your family transferred you money abroad for medical and education, earlier they had to withhold 5% tax before paying it to you. Now that has been reduced to 2%. So only on medical and education purposes, it will be reduced from 5 to 2%. So that is the other big takeaway. A lot of changes in compliance with respect to IT return, customs as well. We'll go through the fine print and get you all of that. But these are the big headlines from an individual investor perspective and investors as well.